we have, first of all, the number of jobs being created low, the rising rate of unemployment, or at least falling off because it's people leaving the workforce, and now more people claiming benefit. It is not looking good.
It is a continued story of a slow-motion recovery of the U.S. labor market. All the indicators that you mentioned, Richard, are absolutely correct. But if you look at this over a longer-term trend, you see that the labor markets are recovering, albeit they are recovering very, very slowly.
If that is the case, are we even right to call it a recovery? Because if more people aren't going into the workforce than are leaving or claiming benefit, then there's a sophistry in saying it's a recovery.
Well, I think the unemployment rate as a percentage is a good indicator, but it's not a perfect indicator. And as you know, when people leave the workforce, you can get a reduction in actual people getting into jobs, but at the same time a reduction of the unemployment rate. So this is of course concerning, but I don't think it's inconsistent with the level of economic growth that we are seeing in the country, because it is still relatively anemic and slow.
Right, and that really is exactly the point, isn't it? Because traditionally, I mean, we are conveniently forgetting, well, I say we, I mean, some people are conveniently forgetting that, you know, 2008, 9, 10, 11, we are 4 years after the return of growth, and there is not a train leaving the station with sufficient steam to bring these numbers into better fruition.
Yes, this recovery on the labor market has been slower than any other recovery over the last 50 years. Now, truly, we came from a very low point, so it will take time to come up. But with the lack of real economic growth and demand for products and services, you know, this is consistent with what you're seeing in the economy. The danger, of course, is that the length of the recovery will cause parts of the workforce to have a very tough time in the future to get back into full employment. And you could be faced with a structural unemployment that is much higher in the future than we have been accustomed to.
You talk about that as a danger. I suggest to you, sir, that is not a danger. That is already here. And whether it's in the United States with its anemic growth, or, for example, in a Greece or a Spain or an Italy with unconscionably high levels of unemployment, that permanent level of unemployed is here.
Well, we know that in Europe and in countries where you have higher structural unemployment and people out of the workforce for more than 6 or 12 months, that it is very difficult for them to get back into the workforce, because their skills atrophy, and you have new entrants into the workforce that are first to the pump, so to say. So it becomes very difficult, and it is something that will be very important to try and address, because that structural unemployment in the United States is something that this labor market is not accustomed to, nor are society support structures accustomed to supporting that level of unemployment over a sustained period of time.